Hello forex traders, welcome to this YouTube channel. On today's video, on today's class, or on today's trader talk, anyone you want to put it, but I'm going to be analyzing these three pairs on my watch list. Though you can check my previous video, I analyzed XEU USD and analyze AUD USD. So the main one I'm going to be analyzing today is the chef, the USD chef. So each end of the week, each Saturday and Sunday, I do post potential pairs that will be trending. What do I mean by that? I mean that pairs that I'm going to be analyzing, pairs that I'm going to be interested in, pairs that I'm going to be taking trade on. So as you can see them, these are my watch list for the week. I'm already ready, I'm already set for the week. So let's go to the chart. On USD chef, first thing first, we are going to be doing a top-down analysis on USD chef. Starting from the monthly time frame. Now, from the monthly time frame, what can you see? Let's try using previous past data to predict what the future may do, like what the future may see. Now we can see around here the market was creating lower high, lower low, lower high, lower low, then lower high, lower low. It's just creating. So this is a downtrend before it now entered this nasty range within this point here. You get me? Manipulated, went back to the range, was still ranging. So it was ranging for, wow, this is so hectic. It has been ranging. So down, it came back here, creating a double bottom. If you check very well, this double bottom is also a double bottom on the what? On the monthly time frame. We have one leg of the bottom and we have two legs of the double bottom. So this is like a double bottom of the monthly time frame. So what do we see here? We saw a double top here, some ranging, nasty range, the neckline here, then so this was like, then cut everything short. This is a downtrend. On the monthly time frame, we could see that USD chef has been on a nasty downtrend. So what are we expecting? What are we expecting? We'll go to the 1 week, to the weekly time frame to make more meaning out of this pair. So on the weekly time frame, what can we see? On the weekly time frame, let's try reanalyzing the weekly time frame to see what's going on. All right, you will see starting from here, you will see a double top here. This was the neckline. What do you see? Pull back to the neckline, continuation, pull back, continuation, pull back, continuation, then it entered some nasty range before it what broke out, pull back, continuation. Now as it broke out from that nasty range, what do we see? A breakout, retest, continuation. So as it broke out, it came to this point here. This point here was one holding it. Remember that this is a week on a monthly key level there. So this key level was holding it. Each time market comes to this key level, it will push it back. Each time market comes to this key level, it will push it back. So on the weekly time frame, we could see a potential, not just we could see a clear double bottom, though the neckline has not yet been taken out yet, but we could see a clear double bottom. Now on this double bottom, what are we seeing? We could see this, that let's come back to volume now. We will see that market has been ranging between this range, between this small zone and this key level. So we could see that this is a pin bar with a bearish engulfing candle. So this bearish engulfing candle is supposed to make this thing at least to reverse, but it couldn't. What do you see? Buyers and sellers were struggling. So what do you now see? A reverse to the upside. This is a powerful weekly 1 week engulfing candle, engulfing out this reversal chart pattern, this reversal candlestick pattern. Do you get me? This reversal candlestick pattern. Now for you to know that this thing is currently going what? Up, because all the confluences is showing up. We have double bottom candlestick showing up, powerful candlestick showing up, taking out, neglecting this candlestick pattern, this candlestick reversal pattern, because this candlestick reversal pattern occurred on the what, on this small zone here. So but you can see ordinary just this one candle took it out. So what will I be waiting for? I'll be waiting for additional bullish engulfing candle or bullish candle, anyone, but I want a breakout of this small yellow bar here. I just want a breakout out of this small yellow bar here. Once I can see a breakout, a clear breakout out of this small yellow zone there, what will I be going? I'll be going to the daily time frame. That's where I'm going to come to. As you can see, the daily time frame showing you that the neckline has not yet been taken out. So if the neckline is not yet taken out, maybe still expecting something like a still push back down. You get me? Unless when the thing has been broken out to at least this level, they'll be waiting for something like this, retest continuation. You get me? So that's what I'm going to be waiting for. Now there's a theory in price action that states that the amount of consolidation taken for any blah blah blah, I don't know how to put that in, but in the same way it will still break. It's still level that it will still break to. It's still level that it will still break out to. So let's be hoping. Let's see. Market is gonna break to this one level. To this same level, market is gonna be breaking out to. So I'm expecting what's wrong, but you get the idea I'm trying to say is that market is going to break out. Once market breaks out of there, then we know that yeah, the confluence has been short. Then what are we going to be waiting for? We're going to be using our Fibonacci. Don't ever forget your Fibonacci. Your Fibonacci is very important. From the neck, from the swing low to the swing high, targeting it on that zone. Once market intersect on that zone there, we're going to be waiting for a pullback to the 50 pip retracement level. So the 50 pip retracement level that intersects together with that little resistance zone, that resistance zone that will change to support after it has been broken. So this is all what I can see on USD Chef. This is all what I can see on USD Chef. What is the rule of engagement? Wait for it to break out. Once we could see a breakout, because you can see that it is currently reacting on this zone. Once we can see a clear breakout, then our analysis will be sure. We'll be waiting for a pullback, then what, a continuation to the upside. So how many pips will be this? This one will be like how many pips to risk to reward, long position. So this will be like a 1 to 5 risks to reward. So that would be massive. A 1 to 5 risks to reward. So it will be massive. Yeah, it will be massive. But though we don't enter trade from a zone. We don't enter trade from a support or resistance zone. We wait for there are some criteria that are being needed to be met before we enter trade. So if you like this content, please make sure you do like, subscribe, and if you have not yet subscribed, please make sure you subscribe and also click that bell icon so that whenever I post or I send a video, you will be notified as early as possible. So these are the things I'm expecting on USD Chef. Remember, this is the time frame we are going to come to, and we are going to sit down and be watching it at this place, because the monthly time frame has already showed us that the direction of the market is down. But on the weekly time frame, we could see a reversal chart pattern count. That means neglecting the weekly time frame direction. Now you know that already know that market move from zones to zone. So on the daily time frame now, we are waiting for a break of the neckline. to further upside, then we are going to be waiting for a matured pullback on that daily time frame. We are not going to come to any, we are not going to go down to any time frame unless we see a pullback on that daily time frame. So when we see a pullback on the daily time frame, we are going to be waiting for what? It to reach the 50 fib retracement level. Then we catch the buy. It's better to be what? Patient. Remember, this is how big banks, hedge funds trade. So let's check what's the rules. Let me give out the rules of engagement of gold. Now, on gold, on my last video, I said that gold is going to be going for a buy because what was I saying? I said that gold is like currently in a range. It's currently forming a range because I could see a lower low. It's supposed to create. I saw a higher low, so to create a higher high. So as it was going up, it couldn't go up, so it pulled back down. So it is inside a 50-50 odd of it going up or down. So on the 4-hour time frame, I could see it creating a chart pattern. A chart pattern means showing that it is showing a double bottom. Now I could see a double bottom. Look at it. When it was in this part here, that's when I did the video and I was like, gold is going for a buy. So later you could see a candle. Now this is a bullish engulfing candle, showing that, yeah. So I was expecting gold to go to the upside, but on the 1-hour time frame I could see manipulation there, tricking traders that it's time to buy. And I knew that no, it's not yet time to buy because this candle that I see is still looking good to be true. You get me? So I went to the 4-hour time frame I sat down on the 4-hour time frame, came to the 4-hour time frame to see what will happen, and I saw it faking out with a candlestick and it closed. Now a bearish engulfing candle. So rule of engagement is that wait for a break out of this yellow bar. Once you see a break out of this yellow bar, 4-hour candle close, boom, enter trade. Next target here, next target that point there, next target 4,235.104. that will be next target. But if gold does not break that bar, then just be expecting gold to drop to the downside. Now, but why am I that sure about gold going for a buy? Because on that same time frame where you're seeing on this chart, this same time frame where you're seeing a double bottom on that zone, when you use your Fibonacci retracement level from swing low to swing high, you could see that the double bottom also intersects on that on a 50 fib retracement level. It is intersected on the 50 fib retracement level, telling you all possible odds of it going to the upper side. So that's what I'm expecting. Why on AUD USD weekly time frame, remember I said I'm expecting AUD USD to go forward to 4. I want it for why? Because I could see a head and shoulder. So these are all the pairs that I'm expecting. I did a video on my last analysis on this pair, so you can check it out. Then I also did an analysis on gold, so you can still check it out. The main one I wanted doing today was this USD chef, and you can see that USD chart is looking too juicy. So only what we are waiting for, a breakout of the neckline, further push to the upside, then a retest to the neckline on the daily time frame retest. Then we'll be thinking that's when we'll be scrolling down to the 4-hour time frame to make more money out of it. But right now we are at we are in the daily time frame waiting for it to break out and retest. Once again, if you like this content, please make sure you comment on the comment section, tell me what you want. Like if you have any questions on this pair, please feel free to comment, and Have a nice day.